myself. Well, let's start by thanking all the organizers of this conference for inviting me to make a presentation about the Latin American perspective of the regional economy. But I want to, before beginning of the presentation, to explain that I am a career diplomat and not an economist. Therefore, I am making or focusing this presentation more on policy-oriented issues than in economic-oriented issues. Let's start by something that everybody knows. This is a grim picture. The world economy is coming down, is showing a very severe slowdown. Although growth reduction of emerging economies started in coincidence with the reorientation of the Chinese economy around 2011, by the second half of 2012, 85% of the emerging economies were already affected. The reduction of growth was estimated to last more than previously forecasted. The pace of the global recovery, says the IMF, has disappointed in recent years. With weaker than expected global growth for the first half of 2014 and increased downside risks, the projected pick-up in growth may again fail to materialize or fall short of expectations, says the Global Economic Outlook issued this week in Washington. I am doing this because Latin America is certainly part of these emerging economies. Since the beginning of the process, growth reductions in emerging economies is 3 times more acute than in advanced economies, in spite of relatively better world's financial conditions. I am illustrating this with images of my country, of course. An ambassador has to send messages, and messages through pictures, why not? The first element, reductions have not been offset by improvements in the economic conditions in advanced economies. First of all, EU stagnated, or almost stagnated. Growth in this area, is projected to be 0.8%, but very uneven. We have heard about the Banco do Espírito Santo in Portugal's problems. We have heard about the political uncertainties in Spain that could threaten the Spanish recovery. We heard about the German problems. The German economy is paralyzed, or almost paralyzed. Same happens with France. Italy is in a very ambitious plan, and we are talking about the major economies in the EU zone, which are very much linked to Latin America in other ways. Japan. The IMF projects only 0.8% growth for next year, coming from a 0.9% for this year, mostly due to the planned unwinding of fiscal stimulus. More positive news in the USA, due to strong fiscal policy and monetary relaxations. These factors are leading the IMF to be more optimistic, projecting its 3.1% of growth for 2015, coming from 2.2% of this year, which is explained mostly due to temporary factors like the inventory, more than expected inventory, than a harsh winter, and some contractions of output and exports. The growth, says the Monetary Fund, the growth rebound is underway as temporary factors wane. But China is very important. China represents today 16% of the world economy. Chinese purchases in Latin America are ever more important. The other day at this university, the Secretary General of the OAS said that in the last 10 years, Latin America is ever more dependent from Chinese economy. In 10 years, China's purchases boosted from $4 billion US dollars to $79 billion US dollar between 2000 and 2010. The IMF projects for China a good growth, but more moderated than expected, so 7.1% for next years. This is due to plans to reorient the Chinese economy to the domestic market and to reduce vulnerabilities and potential economic weaknesses. But now we have another element that nobody is really envisaging in any of the economic outlooks. It is the geopolitical risks. The world is more risky than ever. Nobody knows exactly what is the impact of Ebola. Some figures say or estimate the Ebola crisis could represent for West African economies about 32 billion US dollars. Nobody knows what would represent the continuation of the Russia-Ukrainian crisis. Nobody knows what would be the impact of ISIS in the regional and the world economy. Around these uncertainties, Latin America is coming down from a very optimistic forecast of 3.9% for 2004, given by consensus forecast in January 2013, to the figures below. ECLAC, in August for this year, was projecting a growth of only 2.2%. Consensus forecast has reduced this figure even further to 1.3%, and the IMF in this week's report is 1.3% for the entire region. But Latin America shows a set of very complex and varied situations impossible to analyze in just 15 minutes. They go from economic growth, like the Panamanian one, which will show a 6.6% of growth, to a reduction or a crisis in Venezuela, which is certainly going to affect that country very much. The reasons, what are the reasons? Are very various and depending on the country to be analyzed. ECLAC some months ago said that reasons for this slowdown are due to a stagnation of the formation of fixed net capital process and a decrease of private consumption's growth. To summarize the situation in these two big elements, but also indicates that in the cases of Argentina and Venezuela, their lack of growth reflects some imbalances which have been present in these economies along the last years. Vittorio Corbo, a very remarkable Chilean economist and former president of the central bank, says Latin American economies are very much dependent on the US and Chinese markets. The IMF reduces the growth projection for Latin America, as we have seen in 2014, to a weaker than expected export performance and deteriorating terms of trade, given the dependence of Latin America to the Chinese market and to the US market. Certainly, these elements are very, very crucial. For the IMF, there are also some supply constraints and tightening financial conditions, like in Argentina and Venezuela, as weak exchange rates that in some cases affect commodity prices. But Latin America, the Trinidad and Tobago Ministry of Finance, in its report to present the budget, says the region, the Latin American region, is characterized by these three, or the region's slowdown is characterized by these three elements: low business confidence, weak investment, and constrained demand for region's export. You see that the most important bodies, including the TT Ministry of Finance, coincide in the most fundamental reasons for explaining the slowdown of Latin American economy. But what is Latin America? It is really very difficult to analyze a variety of countries, and let me just focusing on the 7 largest economies of Latin America to show an impact, in order to draw a clearer picture of region's economy. The impact of economic slowdown of Brazil, the 7th world economy with more than 200 million inhabitants, is definitely not comparable with the situation of Uruguay, a very solid economy, but is a country of just 3.4 million people, which is the 78th economy according to United Nations figures. The difference of impact, the Latin American economy is 3.3 trillion US dollars. Brazil represents, of this figure, 2.25. The slowdown is very severe, as we can see, 0.3%. Mexico, you will see it is 1.26, the 14th largest economy, whose impact, whose growth for this year will be 2.4%. For Brazil, GDP, says the IMF, GDP contracted in the first half of the year, reflecting weak investment and a moderation in consumption given tightened financial conditions and continued weaknesses in business and consumer confidence. These factors, along with weaknesses in competitiveness, are projected to keep growth subdued in March of 2014. In Mexico, weaker than expected growth in early 2014 on account of weak external demand and construction activity lowered projections for these years relative to April 2014. However, the Mexican economy is very related to the US economy, and with the rebound of the US economy, it can have better performance next year. In this picture, we see that both economies, together with those of Colombia, Chile, and Peru, are expected to have a positive growth in spite of the severe slowdown affecting the entire region. Only those economies which are not financially integrated will be in recession, according to IMF and also ICLAC. Now, reactions to this. IMF has said also recently, and many countries have reacted accordingly, to use their reserves. Brazilian reserves are the very extraordinary 375,000 million US dollars by September 14, with a program of investment in infrastructure of 164 billion US dollars. Brazilian economy is also characterized by greater social inclusiveness, which has been one of the features of last 2 administrations of the PT, the government, the party of the government. 2 minutes. Mexico is also with a very strong reserves, an investment of infrastructure which is very solid. Argentina, the reserves are declining, definitely declining, and we have here a problem. And if we look at the other three countries, Colombia is showing strong reserves and also a very solid rebound, very solid growth, economic growth, with investment infrastructure according to its budget, which is also very important, $3.1 billion. Venezuela, it's a problem. It is something to be analyzed in other areas, and Peru with these reserves. Now, what happened with Chile? Chile is experiencing also a very important slowdown. According to the Central Bank of Chile, this year we are going to have just a 1.9% of growth. However, the Chilean economy is solid in terms of reserves. Also in public expenditure for 2015 is experiencing a budget increase, a very fundamental increase in public works and concessions and so on. What is going to happen is that these elements are going to keep the fundamentals of the healthy economy with an inflation rate which is going to maintain around 4.5%, although this is very much related to the exchange rate. Now, the gross fixed capital formation is also robust. We hope to increase this by next year in a more substantive figure. I don't want to bother you more, just to thank you for your patience, and I hope to have illustrated a little bit about what happened in the regional economy. Thank you so much.